Sweet. Okay. So the biggest thing that I want to go over with you guys, the biggest thing that you guys hopefully are wanting to get out of this is essentially just the fundamentals of investing. So after I go through this, ideally you'll understand why you guys should start investing now, and then hopefully I can give you guys a few different tips on like what you should start buying, like how you should start investing too. So if you guys have any questions along the way, it's a small group of us, so feel free to ask me any questions or write them down and we can go over it at the very end too. So so for me, I've been investing for the past couple years. I've been investing since my very first year selling, and I've taken almost every class you can at BYU Idaho on investing. I've read a ton of books on it. I've taken additional courses from TD Ameritrade. So I've been doing a lot with that, and so hopefully this is helpful. I'm not giving you guys financial advice, so take it for what it's worth, but I'll share with you guys some things that have helped me make a decent amount in the stock market, and also just so that you guys are set for retirement. That's the whole plan. So just starting out with a question of why you guys should start investing now. I just want to show you a few scenarios. Let's see if I can share my screen with you. Give me 2 seconds while I pull this up. Okay. So I'm just going to go through a few different scenarios with you. Hopefully this helps you understand why essentially you should start investing now. So scenario one for this is if we're looking at the general stock market, so the S&P 500, that is essentially the top 500 companies in the US. And so if you're investing in that, then you're investing in all those companies combined. So the average return is essentially 10%. It varies based on like how you're looking at it. So it can vary between like 8 to 12%, but annually you can usually expect about 10% return. So if you start investing now, I'm just putting 6,000, which is what you can invest for a Roth IRA. And I'm going to go into what a Roth IRA is in a second. But if you do $6,000 every single year for the next 10 years, and then you just let it sit, then by the time you're 65, you'll have like $3.2 million just with a 10% interest. So you've only invested $60,000 and you have 3.2 million by the time you retire, which is not bad. The cool part about this, and I'll go into it for like the benefits of a Roth IRA in a second, but one of the biggest things for it, a Roth IRA that's just helpful for you guys to know, is that everything that you make in that retirement fund, you don't pay taxes on. So not only are you finishing out, like you're retiring with $3.2 million, but you have $1.6 million saved that you didn't have to pay to the government that you otherwise would have, which is also nice, in my opinion. So I'm just looking at this scenario, and then I'll show you a few different scenarios. So this is just doing that if you're 20 and you're doing that. I mean, like if you wait until you're 75 before you pull it out, you're at $8.4 million. So that's the first scenario. If you're looking at the second scenario, the biggest difference is waiting. So if you wait until you're 30, so you're waiting 10 years, then you're investing the exact same amount, $60,000, but you're waiting 10 years. And so you're waiting until you're 30 instead of 20. You just lost about $2 million. So just comparing it, you're only retiring with 1.2 million in comparison to starting when you're 20 years old is 3.2 million. So do you guys have any questions on that?
I do. So you said, did it vary the yearly return on it? Did you say it's 8 to 12 or is it always 10?
No, it goes up and down. So it just depends on the year. So for example, in 2007, it was negative. But so the way that I invest personally is all long-term. And so it's, the way that I was taught was you put money into the stock market and then you don't you don't put any money into the stock market that you need within the next 5 years. And so, yeah, that's if you put money in now and you're not pulling out until you retire, on average, you should be gaining about 10% each year. Did that answer your question, Pearson?
Yeah, I did.
Sweet. Okay. So let's look at one other scenario. So the other scenario is for a Roth IRA, if you're married and you put more in right now, so you're only putting, and you're putting $120,000 over the next 10 years. And so you're just saving and you're putting that money into the stock market and you're making an extra 3 million. So you're retiring with $6.5 million there.
Yeah.
Which is because this is the magic of compound interest. That is 10% of the total amount that you have here. So as this number goes up, like the total amount that you're making each year goes up. That's why like the very last part, like it just skyrockets. You're making over $1 million each year, 2 million each year. So it's cool. So longer, essentially the biggest thing that I want you guys to take away from this is you want to invest now, and you want to invest as much as you possibly can now while you're younger rather than waiting, because the whole goal is to have money when you retire and you don't have to worry about it. So, questions on that before I show you a calculator, and then I'll go into, I guess,
Yeah, I have a question.
where you should invest.
The 6,000, is that annually?
Yep. Yeah. So
Cool.
the most you're able to invest in is 6,000 annually
Okay.
for a Roth IRA.
Okay, cool. Unless
I
you
have a
have.
question, Tanner.
Yep.
Hey, Tanner. Sorry if you can hear. I'm in the mall right now, so it's gonna be really loud. But
You're good.
Is there any way to increase that amount per year? Because you said that if you're single, you can put in 6,000 max. If you're married, you can put 12,000. Is there any other way to increase that?
Nope. No. So not for a Roth IRA. So you can invest it in other places. For example, so I have money in a traditional IRA as well. I also have money in Robinhood. But in terms of the Roth IRA, the max you can do is $6,000 based on what you're earning. So once you start earning too much, you can't. So like if you're married and you're earning over $200,000 a year, you can't taxable income. Then you can't invest anything in the Roth IRA because they want you to pay taxes. Yep. You want to answer your question? I just muted you, but they can hear you on the side.
I was just gonna confirm too. So with traditional and Roth IRA, it's still 6,000 combined, correct?
Not with traditional.
Like if you can't put 6,000 traditional and 6,000 Roth IRA per year.
I'll look into that, but I believe that's correct.
Okay.
I believe you can only do one or the other, but don't quote me on that one. I'm not entirely sure.
I thought that's what I was just confirming. Because if not, then we'll fit the system.
And why 65? Is that just like the average age of retirement?
I think the average age is actually closer to 62 now.
Okay.
So
Yeah.
it just depends. It's I just think that's ideally you're waiting longer. And so if you have different retirement funds, then and you can wait longer to pull money out, then do it, because this is tax free. Like anything else that you're investing, traditional IRA, anything else, you're paying taxes on that.
Okay.
So
Do you have to pull it out all at once?
Oh wait, say that again, Pearson. Pearson, Spencer, and then Hunter.
Do you have to pull it all out at once, or can you take it out gradually?
No, you can take it out gradually. So,
Okay.
So for example, if you're making 10% each year, if by the time you hit 62, 10% of 62 is almost 500,000. So if you just pull out 5%, then you're not losing money. You're actually still making more money than you're spending each year. So that's the cool part.
With Roth IRA though, don't you need to wait till like 59 and a half or 60 and a half? And then yeah.
So I'll go into more details in just a second on Roth IRAs.
What would happen if the stock market crashed?
It probably will. It usually crashes every 10 years.
Mm-hmm.
So but I guess what is your question?
Just like, would you lose that money that you put in?
You only lose money if you sell it. So
okay, cool.
So how I invest money is I base it off of fundamentals. And so actually, let me answer that question in 2 seconds, Christian.
Okay.
Spencer, Hunter, and then I'll come back. If you guys have questions, write it down because I want to go over that at the end because I might answer that in a second. But Spencer, what question do you have?
What's the difference between a normal IRA and a Roth IRA?
Yep, I'll answer that in 2 seconds then. Hunter, did you have any other questions?
Yeah. So when it comes to having both the retirement and then the traditional one, is it mathematically better if you split it between the two, or what would be the specific reason as to why you have both?
So yeah, so let's just go into that, I guess. So Roth IRA, I'll explain the difference between a Roth IRA and a traditional. So it's essentially a Roth IRA means that you're paying taxes on what you make, and then before you put it in, once you put it in there, then you don't have to pay tax on anything that you make. A traditional IRA is any money that you don't have to pay taxes beforehand. So for example, if I make $100,000 from my boss, and then I put money into a traditional IRA, that means I only have to pay taxes on 94,000 instead of 100,000 now. So it defers taxes for later. Roth IRA makes it so you pay taxes now, but you don't have to pay taxes later. In my opinion, Roth IRA is the best financial option. If you're not making over 200,000 and you're married, then I think that's the best option.
Okay.
And then afterwards, then you switch over to a traditional. So
Is your main reason for that just because like taxes are just gonna keep going up and you're just gonna get pooped on when you're 65 years old? Is that one of them?
You're getting taxed on more money in the end.
Yeah, so I'd rather pay tax on $6,000 than 3.2 million. That's
And also after a certain point, you can't even put into your Roth IRA. Like after you make over 200,000, like you can't even. put in
yeah. So if you're continually making, yeah. So I guess going into Roth IRA, so there's the cap on when you can invest it. A Roth IRA, you can put $6,000, and then there's a few different points with the Roth IRA. So any money that you're putting in a retirement fund, like a Roth IRA or a traditional IRA, you can't be pulling that money out. And so there's a few different reasons why you could. So like if you, I think you technically can if you have a baby or if there's a death in your family or like certain different things, like they don't penalize you. Otherwise they penalize you for it and you pay taxes on whatever you made. So
literally life or death situations.
Yeah, literally life or death. Actually, I think it's even more lenient. You can look up the rules, but I think it's actually even with college and things like that too. But my advice is if you're putting money in a Roth IRA, don't plan to spend it until you're 60 years old at least. That would be my advice. And I think that'd be the advice of most people that have made money in the stock market. So any questions on Roth IRA? We'll go into different stocks to buy and the platform to do, but let's just answer questions on Roth IRA first.
I got a question.
Okay.
So if you were investing in the Roth IRA and then you say you were making over $200,000, would you just have to take that money out from the Roth IRA and put it into a regular IRA,
Nope.
or would it?
No, so whatever you invest in there before you make $200,000 is fine. Once you start making over $200,000, you just can't contribute any more to it.
Okay, so then you just invest in something else.
Yep. Yeah. So like you can open up a traditional IRA or you can start investing in other platforms. So this is just a retirement fund. So there's just tax. The purpose of a retirement fund over anything else is there are tax benefits to using a retirement fund. And not paying 50% taxes or whatever, depending on whatever your thing is at, is worth it, in my opinion. So I would try to avoid taxes as much as possible. I would try to defer taxes. And this one is the best way around taxes. So any other questions on retirement funds, Roth IRAs, anything like that before I go into how you set up one? Okay, cool. So in setting one up then, I don't think it really matters what platform you use. The biggest thing with it is, so by platform, I mean, there are different companies. So you have Schwab, you have Vanguard, you have TD Ameritrade. So there are different companies that you can go and invest with it. You can go create a Roth IRA. And so for me, I don't think it really matters essentially which one you use. The biggest thing though is don't do anything that has fees. Like for that, I wouldn't pay anybody fees for a retirement fund because that's a very passive, you put money in there, you invest it, you leave it be for the next 60 years or 40 years or whatever. So that's the only thing I look at. For me, I use TD Ameritrade. We just met with the guy. He's worth like 1 billion. So he's doing really well for himself. Like he has a ton of different investments and he has everybody use TD Ameritrade. So, Capita, he's the founder of Capita Investing. I don't know if you've heard of it.
What platform did you say it was?
It's TD,
Okay.
like Tanner Davenport, and then
Cool.
Ameritrade.
Cool. Awesome. Thank you.
Yeah, no problem. And they also, if you're wanting to learn more about stocks, TD Ameritrade has some of the best courses that you can take on that. That are free. Like you can't really get free courses like TD Ameritrade has. So, Hunter.
If you decided to like switch, like, so if I were to be using Schwab right now and I wanted to switch, would there be some kind of fees where I could transfer it over, or would I have to just start completely new?
I don't think there are any fees for it.
So you could just switch over?
Yeah, I think so.
Okay.
I don't think that they'll charge you money, but I'm not an expert in that.
Okay.
Yeah. As long as you're just not paying fees for that,
Okay.
you shouldn't be paying fees for a retirement fund. So you have a question on this before I go into like what you should start investing in? All right, let's get into it. So I'm not going to go into a ton of details on this, but I would be down to do a different class on this to go into more details on it. So my advice, if we're just looking at a retirement fund, is to do what is called an index fund. So an index fund is essentially actually, let me back up. An ETF is a group of stocks altogether. And so you're buying an ETF, which is buying a bunch of different stocks. And if you do the index fund, that's like the top 500. That's the S&P 500. So like that's the top 500 stocks in the US. And it's like Apple, Amazon, Microsoft, those are all part of it. So if it were me in my retirement fund, in Sarah's retirement fund, we mainly have so it's right down the letter VOO. So that's Vanguard. Vanguard made the ETF, but it's just the S&P 500. So that is what on average will produce like 8 to 12% each year. For me Josh, do you have a question on that?
Yeah, didn't you say that? So Vanguard is one of the platforms you can use to buy it, but it's also, so you can buy Vanguard through TD Ameritrade?
Yep. Yeah.
Okay.
Yeah. So there's platforms, and then each company creates their own groups of stocks that people can invest in. So like even on Robinhood, I can go buy Vanguard stocks.
Cool.
So yeah. That's a good question. So I have I have the Vanguard, and I do the majority of it there. And then the letters, if you want to write this down, it's TQQQ. So basically that's, I won't go into details on like, it's a triple leverage fund. It's for the NASDAQs, like the top 30. I believe I'll have to look into it. I believe it's the tech companies, but essentially like it goes with the stock market as well. It's pretty low risk. So those are the two that I would invest in your retirement fund. I personally don't do individual stocks in my retirement fund. I do in Robinhood and I do in other things, but I just don't do it in that. So questions on that before I go into different stocks, like how I choose stocks?
You said TQQ, right? The last one?
Yep, there's 3 Qs. So T
Okay,
and then 3
cool.
Qs.
Awesome. Thank you.
So
Yeah,
I
quick
think it's
question.
valued at like $150. When I first opened up my Roth IRA, I bought that at what would be worth, I believe, around like $8 now. So that's done well for me.
And how often do you buy stocks in that one?
and like the ETFs?
Those I just do in my retirement fund. So Sarah's Robinhood only has VU, so the Vanguard one, and TQQQ. Her Robinhood only has that. And then all of our retirement funds only have really those two stocks, those two ETFs. And so I just buy and hold, and I don't ever look at it. There's zero emotion in it because, so to answer your question, Christian, and this will go into what you were saying too, Everett, is in general, if you're worried about the market crashing, it's, do you feel like Apple will go out of business when the market crashes? And if you don't, if you feel like they're going to continually grow and do well afterwards and people are going to continually buy from them, then you're essentially buying part of their company when you buy stocks. And so it doesn't, even if the stock market crashes and the number makes it look like I have less money in that fund right then, it doesn't matter, because in the long run, if they're going to continually grow, then I didn't lose money. I just wait until it goes back up. So to them, it just means that they're valued less for the time period. Like Apple would have been valued less when the market crashed in 2007 and 2000. So did that answer your question?
Perfectly.
So Josh, by the way, do you have a question, or is that a hand from before? Oh, sweet.
Sorry about that. Yeah, I didn't know you had to put it down.
No, you're good. Okay. So for me, there's two types of different investing. There's technical investing and there's fundamental investing. Technical investing is just looking at charts and then finding trends. I kind of like that. That's more of like what swing traders do, or day traders. That's more like the riskier side, because it's hoping that you can find the right trends and then hoping the market doesn't crash and like completely counteract any calculations that you have that are helping you buy stocks. Will you guys be all quiet down just slightly? And then the other one is fundamental. So the fundamental trading, that's what I prefer. A lot of people do kind of a hybrid, and I think there's a lot of benefits in that as well. But fundamental trading is essentially looking at the company, seeing if it's a good company, seeing if it, like financially, they're doing well, if they're not going bankrupt or anything, and then buying it based on that. And then you can buy and hold, and you have the peace of mind saying that, yeah, like I know that Apple's not going to go out of business. I know Amazon's not going to go out of business. Not only do I know that they're not going out of business, but I believe that they're going to continually grow and increase their market share. And if that's the case, then buy it, because as they increase market share, then you make more money. So an example of that is like Lulu, or actually Shopify. So I bought Shopify when it was like $130, and that was when it was starting to get popular, but not everybody used it. But I looked at how much market share that they, like their potential market share, and like where they could start tapping into. And I believe it's well over 1,000 now.
Jeez.
And so that's just one example, but it's just because of that, and it's still growing. So like nothing's changed with their fundamentals. And so I had the peace of mind, even if it drops like down to $500, like their fundamentals are still there. Like it's still something that most brand new businesses are using. So, but yeah, do you guys have any questions on what stocks to buy before I go into, I guess I have two other topics I want to touch, and then we're done.
Question.
Yeah.
Why do you do your retirement on TD Ameritrade and your fund stocks on Robinhood? Why not do it all on the same one?
TD Ameritrade, I don't know if they do it now. They used to charge money for your general funds. So like if you're just buying stocks just generally, then they would charge you money for it. And Robinhood doesn't. So yeah, that's the biggest reason. Unless I'm paying somebody to go do my stocks for me, then I'm not down to pay fees. And so rather than paying an extra $7 for fees, I just use Robinhood, and it doesn't charge me fees. But that being said, I use TD Ameritrade for a lot of research, like in researching companies, because TD Ameritrade has significantly more than Robinhood has. Like Robinhood doesn't really have anything to research stocks, to look at their fundamentals, to look at anything, to look at charts. And so, yeah, so I use both, but I invest through Robinhood because it's free. Any other questions on that? on stocks, on anything in general before I leave you with two things to think on? Cool. Okay. So, I guess two things for you guys. One is, and then I'll answer any other questions you have just about anything in general, about stocks, about investing, about anything. Is what I would do if I were you guys is I would go open up a Roth IRA. And in opening up a Roth IRA, it essentially, it will, you doing that now and you start putting money in now, you don't have to invest everything now. But if you open it up in 2021, then even if you invest it in February, you can still invest it for this year. Like I would go make that a priority now to open it up, because it needs to be opened up at least, even if you don't put money in it yet. The second thing, and I got a question on this, and I got a question on it before, and so I just want to answer it. When you have, I want to break it down. So you have the platform of TD Ameritrade, right? And then inside the platform of TD Ameritrade, you have a Roth IRA, like that, which is the fund. And then inside the Roth IRA, you have the individual stocks that you purchase. And so you want to put $6,000 into the Roth IRA so that that's tax-free. You don't have to invest all $6,000 right now. So for example, like I wouldn't ever try to time the market and try to bank on it being lower, but you don't have to invest all $6,000 in Vanguard right now. You can do 1,000 now, 1,000 next month, 1,000 the following month. Or what I would probably do is I'd do 3,000 now, and then, or like 3,000 whenever you put it in, and then 1,000 the next month, 1,000 next month. So it's just cost averaging it out. So like you're just not banking on it because it's long term. So the difference between $1 or $2 in 40 years doesn't really matter. Well, it matters significantly less, I guess. So that's the first action item. I would go open up a Roth IRA. Feel free to text me questions that you have on that, but you go to TD Ameritrade, you type in Roth IRA. It's pretty self-explanatory if you just do that. The second one is, if you guys are wanting to learn more about fundamental trading, and like, so you guys, if you're able to go invest in your Roth IRA, then, and you're wanting to invest additional money and invest in different stocks and like find out how to do that, my biggest recommendation, the book that I would recommend is, if you guys want to write it down, Josh, I think I told you about it as well, but it's One Up on Wall Street. So One Up on Wall Street is from Peter Lynch, but One Up on Wall Street is by far the most recommended book that I've ever gotten. Like anybody that I've talked to that's in stocks that has done really, really well, millionaires or billionaires, they've all suggested this book. And so I would do that. It's more in line with the way that I invest. It's not the cool hype. It's more of like the Warren Buffett of making a lot of money, but not like the cool day traders that say they make a lot of money on YouTube. So it's not the cool hype that they have, and their videos. Warren Buffett's not doing the cool videos that all the day traders that are making $100 or something each year.
But he's also worth billions. So
what was that?
He's also worth billions. So I guess it doesn't really matter those YouTubers on their day trade.
It's true. Everett, did you have a question?
Yeah, I had a question about the Roth IRA. I know it gives you an option to like choose whether you choose which stocks to put your money in, or you have like, automatically do that. Which one would you prefer?
I would prefer to do my own, because I don't want to pay somebody else to do it, because if you let it choose, then you'll probably have to pay somebody a fee. So I wouldn't want to do that. And second one is, for my retirement fund, I just do the general stock market of the S&P 500. So yeah.
Okay. So you just do the ETFs, those.
Mm-hmm.
Okay.
Yeah. That's all I would do. Cool. Any other questions for me? Oh yeah, Pearson.
So I'm chilling over here creating my Roth IRA thing. Do you put Moxie as your employed status, or how does that work? Do they need that or no?
Yeah, you can put Moxie, I think. I don't know how it works for 1099. I haven't created one in a couple years.
It says
but
employment status. Would you say we are employed or self-employed since we are on W-9s?
You're self-employed because it's your 1099.
Sounds
Good to
good.
know. Also, so if we're self-employed, do we not have to put the address of Moxie in? Because that's what I was going to ask what we put.
I haven't created one in 5 years, 6 years. So I don't know, but I would assume that you don't have to if you're self-employed. Maybe you can. So let me back up. So the reason why they're asking is to see what is your income source so that you're getting money. They don't want you to be borrowing money and putting it in there. And so they're making sure that you're actually making money is the biggest thing. I think that's the biggest reason why they ask. But yeah, what other questions do you guys have?
I have a question.
Zeke,
What's
up,
up,
man?
Tanner? Can you open up multiple Roth IRAs?
You can only invest $6,000 a year. So if you happen to invest open up two different ones, so you had one in Schwab and one in TD Ameritrade, the government will find you if you invest more. Actually, I don't think it lets you invest more than 6,000. It's like it would be 3,000, 3,000. So
It's hooked up to your social security.
yeah, it's hooked up to your social, all your taxes, all your life. So it's not, yeah. Long story short, to answer your question, no, I would just do one.
Long story short, government's stupid. That's what you're trying to say.
Wait, Josh, were you gonna ask a question?
I totally spaced what I was going to ask you.
Oh, okay.
So
Was this helpful for you guys?
Very.
Yeah, this was fun.
Sweet.
More books on investing?
Would it? Wait, who said more books?
Me, Christian. Do you have more book ideas or
I would
recommendations?
start with that one.
Okay.
That one will give you the foundation to investing. If you guys want, would it be beneficial if I did another one of this like next week or the following week and went into more details? Because this was just to give you the foundations of opening up a Roth IRA and like hopefully helping you guys want to invest now. Because that's the biggest thing is don't wait. It's just make it happen now so that you're set when you retire. So
yeah, I'm interested.
I would like it.
Yeah.
Okay. Well, would you guys text me different questions that you'd want me to answer? I can go into whatever I want. Like I can talk about the stock market for hours. I love it. So I can go into whatever I want, but if you guys want to text me different questions that would be beneficial for me to go over with you guys, I would, that'd be helpful in helping to understand like where you guys' understanding is at and what you guys are wanting to get out of it. If you guys are wanting to do this again.
Yeah. Do you invest in crypto at all? That question.
So have I invested in crypto? Yes, I bought Doge. I bought Doge when it was like 4 cents. And I made like 30 grand on that sale. So yeah, so I did do that. Do I recommend it? No. Do I have cryptocurrency right now? No. I don't understand it enough. And so like my philosophy is I invest in what I know. That probably means that I'm missing out on a lot of opportunities to make money, but it also feels like gambling if I don't know it. I know that Apple's going to go up. I know that, Zoom, I bought Zoom before everything happened, like before COVID and everything. And so I bought that at like $60 and it shot up well over $500. And so like, I know that though, like I know the fundamentals, I can look at those things. So that, to answer your question, the question that you didn't ask is I like to invest in what I know and I don't really know crypto. So that was a shot in the dark that I did and it was worth it for me, but I also don't have the addiction of gambling. So I won't do it again. Any other question? Oh, Josh.
Is all of your stock trade and are all your stock trades, is it just for retirement or do you plan on working, up until you're 65?
Yeah, so I have my Roth IRA and my traditional IRA, and Sarah's Roth IRA. Those are all retirements. But so there's different tax benefits. If you buy a stock and you leave it in for at least 2 years, you pay significantly less tax. It's called capital gains tax. You pay significantly less taxes than if you sold it within the first couple months. So there's a difference at 1 year and there's a difference at 2 years. And so mine are, I mean, for sure, at least 2 years. I don't have any intention of selling any of my stocks unless the fundamentals of the company change, or yeah, I'm not planning on liquidating. I'm not planning on cashing out and then going and buying something with it. My goal is to leave those in there for a while. So, and then just live cheaper. Cool. And did that answer your question?
Yeah, that did.
Okay. Any other questions for me before I let you guys go? Okay. Well, I appreciate you guys. Hopefully this was helpful. If you guys have questions in setting up your Roth IRA, setting up a TD Ameritrade account, or just random questions about the stock market or something that you'd want me to train on, if we like just spew whatever I know about it. If you guys have anything like that, just feel free to text me or call me. And I'd love to go over it next time we meet, or I can just let you guys know individually too. So appreciate you guys. Hope you have a good one, and I will talk to you all later.
Thanks, Daniel.
No problem. We'll see ya.
Bye.